The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the December 9th. Terrific Tuesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a wonderful start of your day. Let's make sure that you and I, that we do all that we can do to have a terrific Tuesday. And, of course, let's always remember what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible. But you and I know that what's scheduled becomes real. And I want to thank you for scheduling your time with me here this morning. I'm grateful for your presence, and I'm here to serve you. I'd love to serve you by just simply, if you give me a call at 877-927-6648, or internationally, you can reach out to us at 727-445-1044. I can serve you. We can both take a look at some chart, commodity, currency, individual stock, ETF, doesn't matter what it is. Remember, if you've got a question, maybe I can assist you with something. That means you're just about to learn something. But if you've got a question, somebody else has got that same question. So don't call for me. Don't call for yourself. Call for someone else. Just simply a random act of kindness. After all, most of us do more for others than we do for ourselves. That is a beautiful way to live. It is Terrific Tuesday. This is Tiger Financials Network. I'm Steve Rhodes, and welcome to the show right now. We've got the Dow. She's off 155 points out here, trading out at 17,697. S&P down 17, trading at 2,042. Composite off 45 points, trading at 46.95. Russell down 6, trading out at 11.60. The DAX off 175. The FTSE down 107. Goldilocks up $33 right now, $33 and moving to the upside with some acceleration. Gold is headed to much higher prices out here. Gold is now taking on a longer-term trend line. We should see, which it looks like that was at about the 1226 level here, 1227 as we speak right now. A close above that today. Muy bueno bullish out there. Not very good Spanish, but it's the best that I can throw at you. Light sweet crude, she's up 21 pennies, leading the charge the upside. Bluebird Bio, AutoZone up $14. PDC Energy up $4. Concho Resources up $3.75. Pioneer Natural Resources up $3.50. Royal Gold $3.50. That's 5%. Harman International Industries up $3.50. O'Reilly Automotive up a couple of dollars out there. Rand Gold up 3.7%. Priceline off a point and a percentage and a half, down $17. Cons Inc. just absolutely getting destroyed out there, as it should. Down 37% out there. Spirit Airlines forming a island reversal top at all-time highs. That thing does not get more bearish than that stock chart pattern out there. Shire PLC down $8. Jazz Pharmaceuticals down $5. CF Industries off $5. Baidu down about $5 as we speak. Okay, so now let's go take a look at the markets. Let's go start off by taking a look at what do we want to take? Let's go take a look at gold. Let's go do that. Go through that for you here, just in case you just tuned in on the second hour. So we got the daily contract out here for gold. Number one, we're taking a look at two different trend lines. The first one being the trend line coming off of the July 10th high. That's your first touch point. It's the red line going across my screen. The next touch point being August 14th. Gold right now is bumping its head right up against that trend line. If it closes above that trend line, preferably with conviction, both volume and a little bit wider ranging bar, you'd like to see it clear this area. Then gold heads to the 1275, 1299-ish type area out here, and that's what I expect gold to do. And I don't expect it to stop. I don't expect it necessarily to just be that this is just a counter trend rally. If we go from that swing point, by the way, from July 10th down to the low that was put in here on November 7th, what you'll see is that 1265 area is your 0.618 retracement. I would say gold's headed to the 1301 level, your 0.786 retracement. Maybe that does set up a Gertley sell pattern. Maybe it does. We'll just simply take things one day at a time. We'll see what gold is doing. We'll see what the bar looks like as it gets up there. We'll see what kind of volume we have behind behind its movement. Right now, you've got all kinds of buy orders that traders who are taking a look at trend lines had nested out there. Those are being filled. We should see gold continue to get its momentum. Of course, some of this is courtesy of Mario Draghi. Mario Draghi speak out there. What he does and what he speaks are two different things. We're seeing the euro move higher. Of course, the euro is the largest weighting structure inside the U.S. dollar index. The U.S. dollar index tracks the commodities better than it does anything else out here. If the euro moves higher, which so far it's held its key reversal session that took place out here on December the 4th. If the euro moves higher, the U.S. dollar index will pull back. That will put some additional fuel in the fire for commodities. If we take a look at silver up 72 pennies right now. Silver having a wonderful day. Silver had broke its trend line. Price actually kind of just sneaked over that level back on that wild trading session last week on Monday, I think it was, on December the 1st, Monday or Tuesday. Now what we saw gold just do is just kind of hang out around this trend line here. Test the trend, in essence, is what it did. And now it's off it with a wide-ranging bar. Where is silver headed to? Well, if we take a look at silver, let's just do this. Let's take a look at, in essence, retracements, just like we looked at inside of gold. Silver right now at the 0.382 retracement, which is $17.02. You're at $17.01. That says silver is on its way to $18.79 out there right now, trading at $17.02. That is what's going on with that silvery metal. If we go take a look at light sweet crude, let's do that. We look at light sweet crude. She's up 43 cents out here. My recommendation, play gold or silver. Don't get in the way of light sweet crude. Too many other things going on inside of light sweet crude out here to be paying attention to. And you've got no kind of reversal signal, no kind of anything. This is the daily chart on this. So I say stay away from Texas gold, Texas tea, right? Texas gold, black tea, something like that out there. That's the Beverly Hillbillies song. I gotta get all those jingles in my mind all straightened out. If we take a look, let's go look at a couple of things here that are actually moving to the upside. I want to see what's moving to the upside on a day like today, and you should want to see what's moving to the upside on a day like today as well. Let's take a look at this Bluebird Biopharma. I found a new use for Amgen's old drug out there. Well, that's good news for them. Black Gold Texas Tea. Thank you, KJS, inside our Tiger's Den out here. You've got Bluebird up at $77. It looks like all-time highs out here. Where's this thing headed to? It looks like to its own stellar constellation out there. I do not know where. To give you a price projection on this would somewhat be foolish out here. So we won't spend too much time on Bluebird. I hope you own a little of blue. I hope you're into blue. BLUE is the ticker symbol. AutoZone, though, having a nice morning, up 2%, up about $13. Looks like they released their numbers here before the bell. Net sales, $2.3 billion. That was an increase of 8%. Their net income was up by 9%, over $283 million from last year. AutoZone moving to the upside. Actually has sold off. It's still up $13. It was up much higher here this morning. It had gotten to a high, how about this, $600. It had gotten up to a high of $608. Right now trading at $594 out here. Volume behind the move so far this morning, 130,000 shares. Yesterday did 400,000 shares. So nothing bearish yet about the pattern out here inside of AutoZone, but it has given back most of its gains. You'd expect that to happen on a day like today. Let's look at a couple of things that are moving here to the downside. Let's go take a look at Priceline off $18. Not much of a big deal, only down about 1%. But where is Priceline headed to? Priceline, what it did, where it's likely headed to, I'd have to say is this candle session it's trading into right now. So the first place in Priceline is going to be this November 4th area. This had gapped down with 3.3 million shares. So far today, 161,000 shares in 45 minutes of trading. So let's say 2, 6. You've got light volume in the case of Priceline on the way back. So Priceline ought to go test the 1081-ish type level out there. But that's interesting to note. Priceline. In fact, let's go take a look at Apple, see what Apple is doing. Apple is Apple is back $1.37. Let's go see if there's, what did I do? Below the chart. Oh, son of a gun. I guess I must have just really closed out the chart. No problem. We'll put a new chart in here right now, post haste. Let's go That's not, I didn't want market depth. I wanted the chart out there. Let me see if I can click on the right tool out here. Okay, so there's Apple. Let me go ahead and put the style template out here. Which one do we want? We want numero uno radio. That's what we want out here. Okay, so now let's take a look at, let me just fit it into the center here. It makes it a little bit easier. A little bit of housekeeping. Okay, now we're going to go take a look at Apple. Apple right now trading out at 111.02. Apple is below this high volume bar out here from December 1st. That was that wacky bar, big trade in just one moment of time out there. The low was 111.27. For me, on some of those huge big block trades, I'm never sure what to do out here. I am more certain of what to do when you start trading below that level. Now, that had 83 million shares. You've done 17 million as we speak today. Apple is moving lower. Just because of the green candle does not mean that it is bullish. So we saw a slight gap down. There is no gap out here today. Trading lower. Where is Apple headed to? That's an excellent question. Let's take a look at its retracement off of its low from October 15th to the high out here on November the 25th. Right now, what Apple has done is only gotten back to the 0.382 retracement, 110.36. Now, if Apple is able to hold 110.36, that would bode really, really well for the NDX 100. So Apple, and watching the 110.36, you're trading at 110.96, 97 as we speak right now. This is going to be important to watch. This is a similar pattern, by the way, to what we looked at in gold on Friday. As price was pulling back, it held its 0.382 retracement of its last move up, that wide-ranging bar that we took a look at out here. So Apple, if it can get back inside this range of this bar, 111.27, I would say 111.27 is going to be the key area to be watching today inside of Apple. If Apple does not get back inside there and it continues with some volume to the downside, what this would suggest is a move back to the 104.57-ish level, maybe 104.57 to 103.08, somewhere right in that range out here. But watch 110.36 and watch for sure today the 111.27. 111.27 will be giving you a pretty important message out there, in my opinion. That's what's going on. Oh, son of a gun, what the heck happened there? That's weird, very weird. In any event, okay, so we're back now. Let's take a look at what's going on. Let's go look at the 120-minute chart here for the ES Mini, just to give you an idea for what's going on intra-session. So the candle session that completed here at 10 o'clock this morning, it happens to be a hammer candle. It's a combination of a doji and a hammer candle out here. So that says you should have, the ES Mini, by the way, should have strong support at the low of that session. The low of that session, by the way, is at 2,035.25. If we see price close below that, coming into the 12 noon time frame, could be the 2 o'clock time frame. If you're long, you're wrong out there. This is where the bulls have given you a message that they want to try to defend this area. So that low of that hammer candle is very important. It's right at this stage here. We're only 18 minutes into the session, so I can't say whether this hammer candle is going to. Now, that was coming at the end of an A to B equals CD pattern as well, but you're not having any follow through as we speak right now. Of course, on a hammer candle, the ideal buy area, especially one that's got a wide ranging shadow, which this one has, is somewhere between the halfway point, which is right here, versus the low of that hammer candle. I'm not suggesting that you jump in on the long side, just pointing out where the best ideal buy patterns are inside this hammer. And also, we now have on a 2-hour chart a very important level to be watching. That's 2035 and a quarter. Right now, we've got the Dow off 175, S&P down about 20 points. Steve Rhodes, TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 171, S&P off 20, composite down 48. We got the VIX index up over 10% again. Yesterday up over 20%. Today up over 13%, almost 14% right now. Up $1.98. Of course, that's going to take the VIX well above its 50-day exponential moving average. That's the blue line going across the top of my screen here. We know whenever the VIX gets above the 50-day exponential moving average, one way that you can use it, you can use the VIX as a tool of liquidity. Whenever there's less liquidity in the markets are going to move lower. It's really that simple out here. And for whatever reason, it's that 50-day exponential moving average that becomes your line of demarcation. If the VIX is trading below that, there's liquidity, and the markets are going to move sideways to higher out here. Once you get above it, it's where the carnage begins. Now we're going to have our potentially second day in a row of the VIX being with a more than 10% one-day rate of change. Last time we had this little cluster of that was back when the lows were being made in October. something to think about. Stevie talking about the next bottom for that Santa Claus rally. We talked about it yesterday's show. We talked about it this morning here, that it was really all about anticipation. It was all about saying, okay, what really ought to happen between now and, I said, Friday, is we ought to see a scary low. Well, yesterday was the beginning of that, with the Dow off 100 points. This morning, we're off more than that. So, and we're not even down to the scary area yet inside the markets. We took a look at signals that in the past had worked. Guess what? They worked again, right? How about that signal with regard to General Electric, just GE, in comparison to what's going on inside the Dow? If you just followed one correlation inside the Dow, this is the one that you would want to identify out here. Oh, this is the Dow Jones Utility. This is another one that you could follow, but it's not the one that's most consistent. Not that it's not consistent out here. Of course, you could follow this pattern here, which was the high-yield bond funds out here. When that's moving in a opposite direction of the S&P 500 as an example. It's the high-yield bond fund that provides you with the information out there. Pretty cool, huh? Let's go take where he is. Here we go. Here's the GE chart. I knew I could eventually get to it. Of course, GE is moving lower this morning, but now we're back. Now things are back on track. It is directional, by the way. It's a directional correlation. We saw GE was moving lower with the Dow moving higher, and even though GE's got basically no weighting to speak of any kind of significance inside the Dow, it is the direction of GE when there's a divergence that it points the way. So actually, for forming a bottom in the Dow, yeah, you'd like to see GE start to move higher with the Dow moving lower. Do we have that today? No, we do not have that today out here inside of GE, but it's a pattern that's in play. If we take a look at the summation index, what do we have inside the Dow yesterday? Well, she finally did close and get below the zero line inside of its price oscillator that forms the McClellan Summation Index. We've got quite a bit, about twice the distance for it to get to before it starts to get into a nice oversold condition. What price levels are we maybe talking about? Well, on a daily chart for the Dow, we're looking at price levels such as 17,563 to 17,175. Those are the areas that, well, and I'll give you really three levels out here because we got to take a look at three levels. Inside the Dow, the numbers for us to be watching are going to be 17,563, 17,351, and 17,175. These are the levels that we have to anticipate. That's all. Now, all we have to do is sit back and watch further patterns to unfold, and those patterns could be slicing right through it like a hot knife with Kerrygold butter. And that says then you go down to the next level. We'll deal with the next level when we get to the first level. We're not even to the first level as we speak just yet out here. There hasn't been much yet done in the way of price damage. If we go look at the longer-term picture for the Dow, so remember those numbers that I gave you. Specifically, let's just say the 17,175 type area. Well, if we take a look at the Dow on its monthly chart, here's what we know. This is what we pointed out, I think, yesterday. Had to be yesterday. I believe it was yesterday. Maybe it was Friday. Time flies here, but I think it was yesterday. We took a look at the horizontal trading range lines out here. Horizontal trading ranges, totally different than primary. Bud's primary, for those of you that aren't familiar, Bud Rolfs, extraordinary human being with extraordinary gifts that he shared with each of us in his primary trading ranges out here. This is a take on that. Why is it a take on it? Because I've got a way to automate it. I've automated this process so that it goes and takes a look at the historical data, and therefore I don't have to visually identify where are the areas where there are the largest number of co-located opens and closes. I mean, it doesn't matter whether it's an open or a close. It just matters that it's the body of the candle out there. And then, boom, voila. Well, what we took a look at yesterday, the midpoint of the monthly chart up at the 18,037, and we said to use this as a guideline. That's acted as resistance. So that 17,991 resistance area. Now we're watching 17,204. That could be the next buy inside of the Dow. 877-927-6648. We'll be right here.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off about 215 right now. S&P down 25. Composite off 62. And you got to admit, what a nice gift the markets are providing to you. Remember yesterday we talked about a scary bottom. Scary type bottom. We're starting to get to that scary type bottom. We've gotten 300 points back here in less than 24 hours inside of the Dow out here. So remember I said, hey, it was easier to tell the story when the markets were moving higher out here. So I said, here's what we want. Here's the gift that we're looking for. And what are you going to do when the market makes that scary bottom? Are you going to be scared? Or are you going to be saying, hey, this market's coming right back. It's coming just like Stevie said it would, that it's going to come back to create that next significant bottom inside of the market. What you ought to do right now is you ought to go ahead and sign up Test Drive Mastering Probability. Get over there. I pointed out a pattern that I noticed, that I identified over the past couple of days, that becomes the, this is now I use several different pattern techniques out here, but this one was real cool. I actually saw this and it blew my mind. Sometimes, look, the reality is that things are in front of us all the time, and the best example that I know of that is, have you ever seen a rainbow? Yeah, everybody's seen a rainbow out there, right? So you believe in rainbows, right? And yet if I were to ask you to look outside right now and ask you to see the rainbow, you'd tell me it's not out there. Well, the reality is all we need is some little prismatic raindrops that are falling from the sky, and the right set of clouds and the right angle of the sun, and the rainbow's there. What do you think? It just appears? It's in front of us all the time. Same type of pattern setup. And one of the tools that I use all the time, and so was looking to say to clients this morning, hey, here's a pattern, here's a chart. That way they can do this on their own charts and tools out there. But here's a pattern, and take a look at what has happened each time that this level got broken. Yeah, it wasn't about buying the bottom tick. It was about being able to pick up the trend. So it was just kind of like, I was like, oh, my God, what a great tool out there. You can learn that tool as well. Just come on over, sign up for Mastering Probability. You can test drive for the next 30 days. Of course, what you really ought to do is you ought to go and join me in the 7-week trading course out there, where we did our first workshop, a 3-hour workshop. That was done on the 22nd. That will be archived on your members page. It'll teach you everything. Well, it'll teach you all the, look, if you value time, then this is a course that you'd want to take. Why? Because I get through all of the rubbish, all of the stuff inside of all the books and materials, because I'm basically using a 3-hour time period. That means I got to get right to the point. That means it's right smack dab to the point and teach you exactly what it is that you need to know, what you need to focus on, so that you can take your game wherever you're at from there to here, and that's really what it's all about out there. So, hey, go ahead and sign up for those things as well. Go ahead and sign up for John Logan's free workshop tonight. You most certainly want to do that. He's got an extraordinary set of tools that everyone should be utilizing. Now, let's come on over and take a look and see what's going on in the gold market. Right now, you got gold's up $39. My clients and I, the Mastering Probability newsletter, we began building our position inside of gold. We did that on Friday. We added to that position yesterday. So far, it's playing out just as we expected that it would. Right now, you're at 1233. We're up above the B point of an A to B equals CD to the upside. That's going to be our December 1st level. It says that gold is headed to not 1275, but at least 1300, 1299, maybe even the 1330 mark out there. Let's go take a look at some of the mining equities. Let's go see what's doing what out here. Now, to the downside, yeah, we've got one to the downside. There's a problem with Allied Nevada. So I hope that you're not inside of ticker symbol ANV. This thing gapped. I don't know what the news is behind it out here. What I do know is a gap down with volume this morning. 12.5 million shares already. The bottom here, the swing point that is trading into, only has 8 million and 7.4 million shares, and gold has just taken off to the moon. So big problems with Allied Nevada. Any others that have big problems out here that I see? Yeah, Freeport-McMoRan. Now, in Freeport, I mentioned I was going to do that. I was going to go take a look at, I will, just remind me, would you? I'll write it down on a pad of paper here. That'll have to be my reminder. I wanted to go take a look at Freeport-McMoRan and the Aussie dollar and do a correlation chart. But you've got Freeport-McMoRan. That's trading lower this morning, down at 24.63. If we take a look at what's trading to the upside out here, big wise, you got the IAG, IM Gold. You've got the Nuggets up 18%. That's what we actually went long in. So now we're probably up about 25% or so because of our blended buy out there. But if we take a look at the IAG is the ticker symbol, up 14%. This is taking out a swing point of an A to B equals CD to the upside. It's doing it with a good volume. That volume that it needs to take out for the B point is November 18th. That's got 15 million shares. You've done 4 million shares in an hour worth of trading. So this is certainly up with volume. If we take a look at its pattern out here, it's now got a confirmed A to B equals CD. That'll take it up to, oh, wow, how about that? $3.85. You're trading right now at $2.69 out here. An ideal buy, if you don't want to chase this thing, is probably about the 242-ish type level. I don't know that it'll pull back to that area. I think this one is kind of off to the races out here. I'd have to say more likely IAG has got its sets on the swing point out here in the $4 range. That high is $4.10. I think more likely that is where IAG is headed to, trading at 269 as we speak right now. Let me take a look at Gold Corp, see what that is doing out here. That's up 6%, up $1.11. Still, not breaking its resistance level out here. 21.42. Boy, the GDX, if this thing gets above 21.42, you're at $20.53. You can expect that this thing will head to a new constellation out there. That would be the B point as well. The B point looks like the trading sessions of pretty much November 19th, I think, is the high at 21.38. Right now, she's trading out at 20.50. Volume behind the move here, 3.4 million shares. Up to these swing points. Yeah, it's moving into these things with volume. But it's got this downdraft that it's dealing with that's got 21 million shares. But today this thing, if it can clear 21.42 today, it's got the volume to get back above and repair that window to the downside. If we take a look, let me see what else. Percentage-wise, let's do this. Let's sort it by percentage to the upside. So you got the Nugget, IM Gold. You've got, First Majestic Silver, AG, is a ticker symbol. Right now, she's coming into an area of resistance, a little supply line, but not much. That had 2.5 million shares. You've done 1.2 million shares out here. So we ought to see AG, First Majestic. We ought to see this get up and at least try to close the window, and that would be getting up to a price point of 476. 476. You close about 476, that window is repaired, and then prices can move up to the next level. Unfortunately, inside this equity, the next level takes you to about the 558 area. That's ticker symbol AG out here. Let's go look at some of the other things that are moving in the markets. Let's go take a look at the ETF structures out here. Let's go see what the Qs, the diamonds, the SPYs are, specifically the Qs. We want to take a look at the Qs out here. They'll be a good signal for us today to understand the market. So you've gapped down here this morning. Volume so far about 16 million shares. What you need as kind of one of those what we'll call capitulation lows, you like to see volume in the 50 to 70 million range. The higher the better. The higher the better. Blasphemy, you say. No. Just the other way around. Inside of the QQQ ETF, when it makes a high volume bar to the downside, it actually forms a bottom. So this case here, no. Do I believe that the Qs are going to make their way back to October 15th? Not even close. That was a huge market bottom that was put in back there on October 15th. Now, if we just simply take a look at the retracement level, you're below the market profile, which you'll learn about tonight at 104.11. This thing is probably maybe headed back to the 100.18. Inside the Qs, we just simply want to see big, massive volume out there. That'll signal to us inside the QQQ ETF that a bottom is or has formed out here. What you don't want to see, well, it depends whether you're a bull or a bear. If you're a bull, what you don't want to see is volume just kind of pulled back, not so much, not with the great volume out there. So again, today, 16 million shares. That's after making a high out here back on the 28th, which was a shortened trading session, 17 million. We'll just call it 30 million shares out there. You've done, as I say, 16 today. So pretty decent volume. Will it continue to pick up or not? That I don't know. Let's take a look at the SPY out here. The SPY down about $2 right now, also gapping down volume behind its move, 43 million shares after making a high with 91 million shares. So you've got volume moving to the downside here. It's taken out an area of support. That was this window that was created between November 20th and November 21st. Where is the SPY headed to? Pretty simple to identify where the SPY is headed to. You know where it's headed to. It's going to be that October 31st level. 199.95 is the likely area where price will travel down to. No, not going to head back to that October 15th area. No way, no how. Of course, I can't guarantee that, but I can at least tell you that is what I believe. If we take a look at the SPY, you've got 198.33 is your 0.382 retracement. You got 199.95. That's the breakaway from the October 31st level out here. That's what I would expect to see the SPYs head down to. Can the SPY head down to something even less than that? And the answer is yes. Where's that level? I would have to say it's probably right about there, and that's the 203.16. So I'm watching 203.16 very closely. It's not even a Fibonacci number, but it's something else. It's some other pattern that I noticed and identified by going back and taking a look at some historical charts out here. So the 203, I expect it will break it, but I just simply watch. And I watch the other patterns inside the ES Mini to help us identify where the bottom. Now, we're going to at least get a bounce. And it could be a big bounce, and it could be the bottom out here. So this is a time period where navigating these waters is really important. You know, you've got to take a look. You've got to use a set of tools that have gotten you to the dance out there and just continue to go ahead and dance with them. And that means going ahead and using stops. Now, let's go take a look at the Dow Diamond, see what it's doing. It's back $1.95 right now, moving down with a decent volume, 2.6 million shares. However, it made a high out here recently with, about 9 million shares? When was it doing that? Let me see. Was there 11 million shares. So 11 million shares. So the diamonds here, December 3rd, had moved higher. Wasn't the swing point, but moved higher with 11 million shares on December the 3rd out there. Pretty darned impressive out here. The diamonds have really not done much in the way of damage here this morning, but where is it that the diamonds are likely headed to? Hey, you got to look at the October 31st level, whether it's the high or the low of the trading session, whether it's the high of October 30th, meaning 170, 194, or the low of the 31st, 172, 79. That's probably the area where the Dow Diamonds will head to. Can they get lower? Of course they can get lower than that. But this becomes our first target area to watch inside of the Dow Diamonds. If we go take a look at the Russell 2000, the IWM, in fact, we'll put the IWM on a weekly chart. This probably will blow my mind. Yours too. But let me go do this and see what we got out here. And, it's a weekly chart. Yeah, it's a weekly chart. The interesting thing here about the idea, it still blows my mind. If you're watching us on Tiger TV, it's pretty cool. Here are this is a weekly chart that we're looking at. You got 4 dojis in a row. I mean, truly, literally dojis. No high wave, no nothing. Just absolutely 4 weeks in a row where price went nowhere. Last week, we saw price budge a little bit higher. This week, if you take a look at where we're trading right now, it's so close to those doji candles out there that it just makes me go, how the heck is that happening? What is going on inside the Russell 2000 out here? Not really cracking, in my opinion, especially if you go take a look at just simply the close here from the week of October 31st out there, the week ended October 31st. I mean, the IWM in that entire period of time, we're talking the week that ended October 31st, and we're now on December the 9th, and the IWM went from a close of 116.56, and you're 115.84, right? What are we talking about? 70 cents? 70 cents in that time period compared to that week that ended October 31st. The low there started at 109.59 and the close out there was 116.56. So the IWM just continues to go basically nowhere. Now let's go take a look at the daily chart. You know, it's always important to go take a look at what's going on, one level above you, or 2 levels above you, so you get a feel for what's happening. And certainly inside the IWM, the Russell 2000, just basically consolidate. In fact, the Russell 2000, as we speak right now, it hasn't completely, the actual window of support, which it really was repaired here, meaning the high of October 30th, which is 115.38. I mean, you're not even trading below that as we speak right now. You're 115.84. So, I guess what we might call the weak link out here, what's that? The idea that Stevie's telling you the market's going to have this scary low and it's going to be the next buy in the Santa Claus rally, and it probably doesn't last through December 31st. It probably goes on much, much, much further than that. Should you be looking to buy dips out here? Yeah, with certainty. You should be looking to buy dips out here. If anything was going to prove that point to you, let it be the October 15th level out there. So, that certainly is my take. Boy, the euro is moving and grooving. That is just going to continue. Take a look at that euro. Take a look at Mario Draghi. Quantitative speaking is all that he is all about out here. The euro is certainly rejecting lows, moving higher out here. That is going to just simply put a fire inside of Goldilocks. We take a look at gold up $36 right now, and we look at that trend line. I don't know why they disappeared off of my system out here, but they're easy to go ahead and put back out here. 877-927-6648. Steve Rhodes, TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is off 163. S&P is down 17 as we speak. Let's go out to Thailand to our man Mike. Mike, thanks for calling. Thanks for holding. How you doing this morning? This evening, I should say, for you.
Steve, I'm doing okay, and anyway, good job to you, and with the guys in the den, because so closely, so in the den too. So
hey, our pleasure.
Anyway,
we're all part of one team here. You know, it's us against them.
That's right. That's right. So anyway, I've been having computer problems. I probably wouldn't have called in. Anyway, What do you think I've been missing a good part of your show because
Sure.
I've been cutting in and out. So what are you saying right now in the market? I feel kind of clumsy asking you this, but
No, that's okay.
Are you calling her? Go ahead.
You're talking the stock market itself?
Yeah. You think, because I'm saying, who says we have to go down further right now? Because we didn't break on the Russell 2000, and the utilities are going higher, bonds are on fire. What's your opinion on that, please?
So it really depends on the time frame that one would trade. But if we take a look at the NASDAQ, okay, when we take a look at the strong dog out here, you'd have to go to the NASDAQ and the Dow. Inside of the NASDAQ, on a 30-minute time frame out here, it has the potential for forming a bottom. Our man Basil Chapman follows us next, and off of the highs out here, it's potentially in its seventh wave pattern, that G wave. It makes the trade real easy because your stop is, one tick below that. You've got a piercing candle that has formed thus far. It just depends where this thing closes at 11 a.m. So that's showing the potential of a bottom. If I look at the ES Mini, it's got actually one of my favorite patterns out here. Prices move lower with less weakness. At this stage, it too has a piercing candle. If it can close above the price point of $2,044.50, this is made of 1 to 1.2728 A to B equals CD, and this may be forming a bottom too. But for me, on a 30-minute chart, what happens between 11 and 11:30? Question. On the longer term horizon, what I believe is that the market is ready to make its next major bottom. I don't know if that's today, tomorrow, Thursday, or Friday. Wednesday, Thursday, or Friday out there. I'm suspecting maybe Wednesday. But I've got to really pay attention to the patterns out here. That's the only way that I can call it. But as far as, does the market have to go lower? No. I'd like it to go lower. I'd like this to be more scary. I want everybody to be saying there's just no way it's over. Everybody's got all the reasons to pack it in. And, and that would form the nice bottom. I'd like to see the QQQ have just a big washout day, big volume to the downside. Whenever the Qs do that, that forms bottoms in the marketplace. So all you got to do is just go back to your QQQ chart on a daily and go take a look at those high volume lows. Now, it doesn't always happen to the day. Sometimes it can be within a couple of days out there, but those bottoms never get tested. Those high volume bars, the downside, for the most part, they never get tested out there. They mark bottoms. So those are the types of things that I'm looking for in the market. Santa is going to deliver, and the question is just simply, where is it that you get in? In my newsletter service, I came up with I identified a pattern that's been out there for a long time. I just never saw it until last night, and it's an ideal place to identify when to get in on the momentum trade when the market shifts. So those are my thoughts, Mike. I wish we had more time, and I appreciate you.
Right,
I appreciate your power and giving us a call.
Hopefully we'll be hearing from you in the den, afterwards.
Absolutely. Take care, my friend.
Thanks.
Hey, folks, stay tuned. Our man Basil Chapman's up next. Have a terrific Tuesday. Look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.